The following is a presentation of TFNN. It is now time for The Trader's Edge. Now, Steve Rhodes.
Good morning from TFNN. Welcome to the August 8th fantastic Friday edition of today's opening bell on the Trader's Edge. Thanks so much for joining me, folks. I'm your host, Steve Rhodes, author of Mastering Probability, the daily newsletter service that is the intelligence for creating financial freedom. I hope everyone out there had a terrific Thursday. Let's make sure that you and I, that we do all that we can do to have not just a fantastic Friday, but a fabulous weekend, folks. And, it seems like you need to be a psychologist of these markets out here, especially today. We've had everything for the Bulls and everything for the Bears, and it's just but 9 o'clock in the morning. So lay back on the sofa. Let Dr. Rhodes describe to you what's been going on in the markets, areas that we need to be paying attention to. We'll utilize all of the tools that are in our bags out here. That includes the A to B equals CD tool, lightning bolt pattern. We'll utilize Fibonacci retracements and expansions. We'll utilize Japanese candlesticks. We'll utilize everything that we can here at TFNN to help you understand what the markets are doing, where they are headed to. And, of course, it's an interactive show. That means you can give us a call at 877-927-6648. Happy to take your call, field your question, assist you as best as I humanly possibly can out here. But let's get to these markets because there has been so much activity out here. It is Fantastic Friday. This is Tiger Financial News Network. I'm Steve Rhodes, and welcome to the show. Right now, Dow futures are trading up 20 points. Trade on at 16,342. S&P futures up 5. They're traded at 1910. NASDAQ futures are up 7 points right now, traded at 3863. Russell 2000 up a few points. Goldilocks back $1.50 right now, traded at 1311. Silver off 2 pennies, so that's flat. Light sweet crude is up 29 cents. Quick peek across the globe out here. Talk about a quick peek across the globe. How about that Nikkei last night? Off 454 points, down 3% last night. The Hang Seng down 56 points. That was only about 0.25% out there. The Shanghai up slightly. In Germany right now, though, the DAX is way off of its session lows. It's off 16 points. The FTSE is down 25 points out here. Okay, so where do we begin our day? I'm going to begin our day pretty much just as I did inside my newsletter this morning here. I think that's going to be the easiest. If you listened to the show probably on Monday, I probably said, hey, it's all about the NASDAQ, all about the NASDAQ, all about the NASDAQ. And then I said that a few more times. And it truly is all about the NASDAQ. But it's also all about the Dow, because the Dow has been a weak link out here. Now, what I'm going to do, let me see if I can do this. Shoot, I can't do it the way that I wanted to. I'm just gonna have to do it the way that I'm going to do it. Here's the Dow futures that I've got up on my chart out here. What I was going to try to do is take some things off, put them back on, and so forth. And I'm talking about different tools and patterns out here because I've got a number of different tools that are on the chart, and just simply to be able to help you and identify exactly what's going on. And what we want to see is what's going on since the highs, what's going on since the lows. Now, if you're watching us on TigerTV, thanks so much for doing that. Appreciate that very much. If you are listening on your radio, your mobile device at tfnn.mobi, don't forget the show streams live to you. If you want to go to the homepage at tfnn.com, upper right-hand side, you'll see a button. 3 little smartphones. Click on that. This show will stream live, and the archive of this show is on Channel 9. We're looking at the Dow futures chart out here. We're looking at the September contract. And what we are noticing is as the Dow was making a high, you see, the markets are nothing more than really this rubber band. If you can get your psychological head wrapped around the fact that it's just a rubber band that expands in both directions out here, sometimes you can get a real big snapback, right? That's where that rubber band comes into being. And it's really a great tool. It's a great set of tools. It's a great tool to understand that that's what the markets are doing. Then if you can kind of shake all of the news that is out there, which is not easy to do, because you take a look at all the news, can it get much worse? Probably the answer is yes. We don't want to see what that much worse looks like. But, let's just kind of forget the news out here and just take a look at what the chart patterns are doing. Take a look at what the bulls and bears are doing. Now, look, with futures being way off their lows, we've seen this game. We've seen this game played out several times this week, right? I mean, because the sellers, nothing could be better for the sellers looking for the futures to move higher as they did here this morning, as they have done. They're looking, as we know, over the course of the last several days, to just be able to sell into that. So from them, you could say the Bears, in one sense, when they last night after President Obama spoken really up until 4 a.m., right? So the futures traded lower right down into about the 4 a.m., 3:30 to 4 a.m. time frame out there. That was actually, if you took a look at the number of tools, that was a time to take some money off of the table out there. And then you can actually get to trade this market in both directions. But now let's get back to, let me just try to stay on point here. We're taking a look at a daily chart here for the Dow. And as the Dow made its high, it did it with one of Stevie's price Rhodes momentum indicator patterns out here. Let me get my cursor so I gave you the exact day right out here on that trading session of July 17th. Yeah, it was July 17th inside of the Dow futures when they went ahead and they confirmed that pattern. Came back up and really confirmed it again on July 23rd and 24th, that little doji bearish engulfing candle out there. And that's where price just simply was moving higher on less relative strength out there. It gave us a confirming signal, and ba-boom, went lower. Now, if we take a look at what's transpired here this morning, you'll see that price made its lowest low in that relative strength indicator reading back here on August 1st, a week ago, last Friday. What's the market done? How about that? What's the market done since then? What the market has done since then, it's moved lower on less weakness, less momentum, as we should say out there. And it's also run into support here, this little dotted line, which is the 200-day exponential moving average. Right now, price at 16,178. So price got down there. It held. Does this mean that this is where price is reversed from? Not necessarily. This is just like we had to wait in order for the signal to occur. You had to wait for the trading session to complete on July 17th in order to be able to get that message, or even on July 23rd and July 24th where you got that message out there. You got to wait for that same kind of message here today. So the answer is, I don't know. I do know that if you see a bullish reversal candle signal, well, then we know what that potentially means out there. We know how you'd play that. We know that you would want to consider maybe really tightening up your short position stops out there. So this is what's going on a daily basis. So the same kind of pattern that made a high may be in place out here with regard to making a low. Is that important information? Yeah, I think it's important. Can this fail? Yes, it most certainly can fail out here. It's the daily chart that we are taking a look at out here. So that's what's going on the daily basis. Now, if we go down and I'm going to borrow something from one of our tigers out here, as soon as I can find that chart. Where did I put that chart? Son of a gun. Oh, it's right over here. One of our tigers, guy named Saratoga Bob. And Saratoga Bob, he likes the 5-hour energy drink out there. And what that means is that he likes to look at a 5-hour chart. And so if we take a look at a 5-hour chart out here, it's kind of a cool thing because we utilize all the different tools with inside of TFNN. Number one, we got Stevie's, this is now on a 5-hour chart here. We've got Stevie's price Rhodes momentum indicator signal as price was making a low out here. Now, again, this is a 5-hour chart, so the bar came in at 4 o'clock this morning. During that time frame, nice bullish reversal that we saw right here coming into 9 o'clock. So now all you really need to see is a higher close here during the next 5 hours. I know that's a long time for many of you to wait. If you take a look at Basil Chapman's Chapman Wave tool out here, guess what? It made a trough G, a potential trough G out here. So we got a number of patterns that were coming together at the same time as the market was making its lows out here. Does this pattern have to hold? No, of course not. That's what we're going to really see, what that first, second wave of selling is all about during the trading session today. I don't know any more than you. What I do know is there are a number of patterns that have come in here and have made some potential bottoming patterns that will set up for counter-trend rallies. So now that's going on a 300-minute chart. That's what's going on a 5-hour chart out here. Now let's go down and let's go try to peek into some shorter-term charts, shorter-term time frame charts out here. I did say it was all about the NASDAQ, but right now it's all about the Dow. I'm going to come down here. We're going to take a look at a 30-minute chart. So let's just change this down to 30 minutes out here. And let's go identify where the real levels of resistance are, these first waves of resistance are for us to be watching for inside of the Dow futures on the 30-minute chart out here. I'm going to say it's that dotted line. It's that 200. If you take a look at yesterday's action, let me get my crosshair up here. Right during the trading sessions of 8:30 and 9 o'clock as we were coming on the air Yes, is this yesterday? Let me make sure. August 7th. Yes, it was yesterday. Take a look at how those levels acted as your resistance points out here. So even though we've made right now we're in the process on a 30-minute basis, and got 13 minutes left in the trading session here. Got a little bearish engulfing candle that is forming out here. If we just simply, I would say that the level to really be focused on, to really be paying attention to, is going to be 16,401. If we see a close above 16,401, that's the area where the bears ought to absolutely be hanging out. And if the bulls are over to come that spot, that's going to tell us, because we're down to a 30-minute basis, that we are seeing more than maybe just a little counter-trend rally out here. In fact, that little 200-day 200-period EMA has acted as resistance almost all the way down out here. So it is a spot that we want to really, really, really be paying attention to. So that's what's going on inside of the Dow. Now, it's really the same pattern inside of all of the index futures out here. So if we go take a look at the ES Mini out here, let's take a look at that. So we'll look at the S&P futures. Let me get the right contract on the screen. And we're going to go look at here. So we're going to take a look at that same dotted line. Here it so clearly shows that is a area of resistance. Last time, back here at about going into the 4 o'clock close on August the 4th, we can see that acted as resistance. Take a look at the yesterday. The bulls gave it their best shot at 8:30, at 9, at 9:30, at even about 10 o'clock in the morning. And then finally, the bears were able to come through and sell. Price has not made it up there. I don't see any reason at this stage for price to not at least go make that attempt out there, and that is the area for us to be watching. Now, inside the ES Mini, that price level is about 1916. Any close above that, and we may have something more going on than just a little bit of an early morning snapback, even though well off the session lows. 877-927-6648. This is Steve Rhodes. This is TFNN, and we'll be right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Investors, Taz Market Research delivers to its subscribers expert commentary on the analysis of 15 different markets each day. Get this invaluable and timely information through the daily market research videos Taz Market Research produces each day before 9 a.m. The video analysis will include reports on currencies, interest rates, indices, metals, energies, grains, and more. You'll be able to gauge where high profitability setups are in each of the markets. Receive a free 2-week trial subscription to Taz Market Research videos on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
With the launch of TigerTV, TFNN has brought our programming to the next level. With TigerTV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on TigerTV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out TigerTV, then visit TFNN.com and see what you're missing. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow futures up 20, S&P up 4.5 out here, and getting a big pop this morning. So far, Techmira Pharmaceuticals, they are the group that is out with potential Ebola vaccination to assist with that, another alarming issue going on across the world out here. They closed at 14.27 right now, trading out at 16.90 in the pre-market. We've got Assured Guarantee, AGO is a ticker symbol. They closed at 21.97. They're trading out at $24 right now. Out with the numbers, their numbers, operating income of $101 million versus $98 million. So just a slight increase there. Nonetheless, they are trading up. They traded right into a support level of their market profile low yesterday, that being the 21.70 area. They did have some volume off of the highs out here, and they've been under some selling pressure, but it truly lightened up yesterday. Coming back into a swing point here. It was coming back into a swing point with light volume out here. That swing point from February the 3rd. That's a weekly chart, by the way, that I'm looking at. So that's the weekly market profile low. Let me see what the daily chart has got in store. So on the weekly chart, it was coming back with some light volume out here. So the daily chart says really needs to get above this little gap down. Also happens to be the market profile high, 24.15. The gap down occurred on June the 30th. Volume down there did accelerate 9 million shares on July 1st. So that top of the gap is the low of 24.26. It'll do a lot of repair work if it can close inside 24.26 soon, today. It's a trade at 24 today would be the day for it to do it. You got Lululemon, Solar City also trading the upside. I know we had some questions over the last couple of days about Solar City. That closed at 75.63. It's up about $1 right now, a little over $1. To the downside, Post Holdings. They reported a loss in their third quarter, but they're going to buy American Blanching for $128 million. Let's look at Diego PLC. DEO is a ticker symbol. They closed at 117. They're trading down about $3 at 114. McDonald's out with numbers, same-store sales, basically atrocious out there. Where'd the McDonald's numbers go? McDonald's closed at $93. It's traded at $93.31. It's trading at $92.97. But if we take a quick peek at McDonald's here, this thing has had some real trouble. Let's take a look at the A to B equals CD patterns out here that have formed. So McDonald's right now is trading down into its swing point from February the 5th. So the low out there is 92.22. What did I say it's trading at? 92.98 right now. So pretty good chance that area gets tagged. If we look at A to B equals CD down patterns out here, its high was this bearish engulfing candle back on May 14th. That was the A point. The B point was the June 13th swing point low. makes a retracement, never broke the downtrend that it established back there on that A point. The C point is June 20th. It's made the 1 to 2 A to B equals CD to the downside. Typically, when you do a 1 to 2 A to B equals CD to the downside, you start to do something different. So we'll see what kind of volume takes place. The key level of support, in my opinion, for McDonald's is going to be that February 5th low, 4.9 million shares, 92.22 is the number to be watching inside of Mickey D's out there. Also to the downside, we got Petro Brazil. PBR is a ticker symbol. Closed at 16.36, trading out at 15.98. Now, what's interesting about this stock is it actually looks pretty good out here. It had a nice sign of strength here back on July 18th. Now, it pulled back in that sign of strength here. It closed that gap. Its next sign of strength is right down here, right on the trading session between July 11th and July 14th. That had 42 million shares to the upside. So we'll see. Right now, support could be 15.7. The range on this, 15.74 to, you'd have to say it's the bottom of the swing, really, July 14th, in my opinion, is the key level to be watching. That's either 15.52 or the high of the prior session on July 11th, 15.36 out there. We'll see how this trades here today. If it's on light volume, that would be bullish out there. Let's go back and let's go take a look at that 30-minute chart out here. Gave you the 30-minute numbers to be watching for inside of the Dow, inside of the ES Mini. Let's go take a look at it inside of the NASDAQ as well. Right now, the number I'd be focused on today is right around the 3872, 3873 level. That's that little red dashed dotted line going across my screen. That's that 200 period exponential moving average. Moving above that would suggest that we have a little bit more than just this little bounce back, snapback rally that we saw inside the market after the move lower at 4 a.m. Being unable to break that level, and that's where the bears are going to be hanging out, folks. So it's pretty easy here, kind of an easy trade. If you want to take the short side, now in essence is the time to do it on an intraday trade, and you see it close above 38.73. And I'm not suggesting that you do, but if you do see it close above 38.73 in a 30-minute chart out there, it says you're likely on the wrong side of the trade. We'll be right back.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or TigerTV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
And we're off to the races. We got up 28 points, straight out at 16,398. S&P up 4 at 1914. NASDAQ Composite up 5 at 4340. Russell 2000 up about 50 cents right now, trading out 1120. New York Stock Exchange up 16. Gold off 80 cents. Silver down 15 pennies. Light sweet crude up 36 cents. And leading the charge to the upside is Mercado Libre. MELI is the ticker symbol, up a nice 12%, up $12 out here. Posting revenues of $131 million versus $112 from the prior year. I don't see the net income out here, but let's go check out Mercado Libre. Gapping up this morning, has some pretty nice volume behind the move as we speak right now. Now, this has a high volume high, so that is where it is headed. I believe we took a look at Mercado Libre not too long ago. Now you've got a confirmed A to B equals CD to the upside, as long as the pattern here holds for the day. The A point inside Mercado Libre, May 21st. That's the low out there. The B point, little doji candle on July 2nd. That C point coming in that retracement on July 17th. About a 0.618 retracement. Hitting the 1-to-1 A to B equals C to the upside here this morning, but when you hit that on a gap up, tells you you're going to do more. Of course, we know we had a high volume high out here inside Mercado Libre. That high is at 112.88. The low of that session, 101.24. Volume out there, 3.9 million shares so far today. 313,000 shares. We'll see how this thing trades. Let me pull this back. Mercado Libre also really broke its downtrend here a while back. We take a look at that trend line. I'm coming off of the high back here on October 22nd, 2013. Oops, there we go. 2013. So you can see the trend in Mercado Libre was broken right about the trading session of June 8th, June 9th, June 6th, somewhere right around that level out there. And now it is moving higher. Should be a bit of resistance out here at this high. We'll see how it holds, if it can hold, the 112.88 level. MELI, that is the ticker symbol. Also to the upside out here, we got Air Methods Corp, AIRM. Is the ticker symbol. They're also out with numbers out here. Looks like here we go. No, well, their second quarter revenue increased by 14%. Okay, from 258,000 versus 226. This also gapping up, also taking how about this? Trading right into a this here. Talk about a sign of strength coming back to a breakout area. Let me go ahead and remove a few things on this chart for you. so that you can take a look at this. Let's get rid of that. Let's get rid of that. There we go. So now we're going to take a look. This had a breakout, kind of a bit of a psychological nightmare out here, but let's take a look at the breakout first. Sign of strength breakout taking place basically on November the 7th, right around the price point of 44.60. That's the high of November 7th. It was the next day, gapping up with 2.5 million shares. Now, price came back to that level. Now, it was hit. It wasn't hit on June 9th. May 9th. May 9th gaps down with 3.4 million shares. But that 3.4 is still going against 2.5, right? So you had more volume to the downside. But when the actual breakout area was hit, it was only 1 million shares going against that 2.5 million shares. Nonetheless, right now, today, it is trying to break. And that's a little consolidation in here when you've got these gaps, the upside and the downside. So AIRM, Air Methods Corp out here, if it can close above the December 30th, 2013 high, which, by the way, that is $59.07 out there, do with more than... only 259,000 shares. That's nothing. It's already done 293,000 shares. Then you've got a consolidation break from about, let me just I'll pull back a little bit further, but let me give you the numbers on this. So you're from 44 to 59, so you get about a $15 and change breakout up there. Now let's pull this back, see if there's anything else to get in the way. And the answer is no, there's not. So that is what's going on inside of AIRM as we speak today. Let's see, what else do we have that is moving? So to the upside, Monster Beverage, MNST, is a ticker symbol. This generated revenues of $687 million versus $630, and net income of $141 versus $106. So you got a lot of people still drinking those 5-hour energy type drinks out there. I can tell you I've never had one in my entire life and don't plan on having one. I'm not saying anything good or bad, just saying it's just not my cup of tea out there. Now, if we take a look at this equity, it's trying to get up into a most recent swing point high. This most recent swing point high takes you back to June 23rd, 1.3 million shares. The low is 72.38. The high is $73. Up this morning with volume of 289,000 shares. I don't see anything really inside here. Where's the supply line to the downside? This stock doesn't really have one. Very interesting. So this thing has had a couple, here, well, you're up above it. So here's its last real sign of any kind of weakness in here. Took place on the trading session of April the 10th. And that really was it? Yeah, April 10th. Then that wasn't really too bad. It was 3.2 million shares to the downside. Since then, it's had a couple of signs of strength with 3 million shares. Almost looks more like it's just consolidating, maybe between the level out here of about the $63 area to about $75. That is on Monster Beverage out there. MNST is the ticker symbol. Let's take a look at some things moving to the downside out here. Getting hung this morning is Hanger Inc. HGR is the ticker symbol, down 22% off, $6 and change. Generating net sales of $275 million versus $267. So being their top line number from the prior quarter, net income was down slightly, about $12.6 million versus $14 million out there. But nonetheless, traders here do not like what they have seen. And this is not the first sign of weakness. This is not the second sign of weakness out here. This is really the third sign of weakness. This could be I don't know if this is really an exhaustion gap, because this first gap looks to be the largest. That third gap would need to be the largest percentage, preferably percentage and dollar-wise, and it doesn't look like that is the case. So let's go see where a hanger, what do these guys do? Do they make hangers? Is that their deal? Let's go find out and see what hanger does. Where's my little research button here? There we go. Let me click on hanger and see what these guys actually do. I'm guessing they're in the hanger business, but the name could just be throwing us off. Let's see. So they provide, so much for that, right? They provide orthotic and prosthetic patient care services out there. So that's what they do, but they're not doing a very good job of it, I can tell you that. Let me take a look at a weekly chart out here. Let's go see what this is trading down into, see if there's any high-volume bars that stick out inside of this equity. Then take a look at the A to B equals CD off of this one from a weekly standpoint out here. That looks pretty darn terrible. So trading below, trading into a swing point that doesn't have any volume to speak of from November of 2012. So it looks like a hanger is on its way down into the 2011 timeframe, November 21st, 2011. Looks like maybe that's where she is headed to, 1457 to 1630 out there. Let me pull this back, see if there's anything else on this chart here. Nothing that looks good, that is for sure. Let's see, what else do we have moving to the downside? You've got percentage-wise, you've got post holdings. What was that? Third quarter, so they generated some numbers out here as well. Thought they were maybe buying somebody else out. Post holdings to expand peanut butter operations with acquisition of American Blanching. Nonetheless, let's go take a look at this equity and see where this is headed to. This looks pretty darn bad as well. I hope the acquisition that they have just entered into is going to turn things around from them, because this stock chart has got major damage to it. This almost looks like the stock chart that we looked at for that other equity, but it isn't. In this case here, the A to B equals CD to the downside. The A point out here, key reversal week. It's a weekly chart that we're looking at. That was back the week of March the 10th. The B point out here on May 19th. The C point looks like the high of June 16th, June 23rd. Out there is your C point. It's already done the 1-to-1. It's on its way to the 1-to-1.272, 3301. I'd have to say 2779 more likely where this thing is headed to. Is this an IPO? Yeah. So post holdings headed back to its January of 2012 timeframe price out there. That most certainly does not look good. Okay, so you've got the Dow's up 3, S&P is up 55 cents, the Nasdaq is off $1.60. So we're seeing that first wave of selling come through. So the areas that we identified here this morning on the 30-minute time frame chart, those are going to be good areas for you to be watching and observing all day long out there. And again, we'll take a look at those numbers as we go into the last breakout there, just kind of summarize where we are at. So we're not there yet. In the at this stage here, we haven't taken a look at gold. We haven't looked at silver, light sweet crude. So let's go take a look at the Goldilocks right now, up about $1.13, trade out at 13.13. Let's take a look at the daily time frame out here, and let me get rid of the A to B equals CD pattern out here. Okay. Now, as we take a look at gold, this is the daily chart. You can see it's had quite some swings. It's gotten up to a price high out here of 1324. The low that's been put in is about 1305. I would say that 1300 even Steven, should be some pretty good support inside of gold. Now, what we know about gold here, and just taking a look at the chart, being agnostic to everything, is that gold, in essence, has come back to its breakout session. Its breakout session being the June 19th. It did not get all the way down to the low of that. That's at 1276. What gold really needs to do, and this is a daily chart again that we're looking at, to really, really prove itself, is get above the trading session from July 10th. If it can close above 1346.80, it probably then is off to the races, and then what you're looking at is A to B equals CD to the upside. If it can do that, it'll get over resistance, and that A to B equals CD to the upside would take price to about the 1-to-1 on that is 1387. Gold rarely does A to B equals CD patterns that are equal to a 1-to-1, either to the upside or to the downside. The 1-to-1.272 price projection, about 14.16 out there. That's what's going on inside of gold. If we take a look at silver out here, silver up 2. Oops, I can click on silver. That would be helpful. If we look at silver, it is basically flat for the day out here. And in the case of silver, we've not seen any kind of bullish reversal signal or anything. What we have seen about silver, so we've talked about how silver has not responded well like gold has. But if we do take a look at silver, if we put this in perspective, again, if you just look at candlesticks, candlesticks are beautiful things. When you see wide price spread, accelerated volume, which is really what you have on the trading session here of June 19th, what we can see here is silver is actually pulled back into that area. Now, the level of support inside of silver with regard to the breakout area, it's going to either be the low of this June 17th area, which is right around the 1943 to 1983. We've seen silver pull back here. What you'd now like to see is some kind of bullish reversal signal to help us to determine or identify that silver has, in fact, put in a bottom. If we take a look at retracement levels, let's look at the retracement off of the low from May 30th to the high that was put in here on the trading session of July 10th. We'll also see that silver's right there, right at the 0.618 retracement area. So what we know is a normal level of retracement inside any market, no matter what it is that you're looking at. We know that that normal level has been attained, so that's bullish there. It's come in there, and it's come back into, a breakout area, a breakout range. So that, too, is bullish. No, we really need to see on a daily chart is some kind of additional momentum to the upside. You would have to say, just simply from a very short-term trend standpoint, it's probably... I'll probably just use the body of this candle. Here's a little bit of... instead of doing that, why don't I do this? Let's just use the channel line out here. That'll be a little bit easier for you. So we'll try to draw the channel line in. Oh, boy, that was a nice move. Say nice move there, Steve. Let me try doing that one more time. Let me see if I can grab that. It's close, and close is what we're going to have to actually deal with. So here's a bit of a channel line that we have silver traveling within. And what you could say is silver breaking above this level here, knowing that we've come back to a 0.618 retracement level, knowing that we've come back to a breakout area, knowing that there's a bit of a downtrend that is in place. You'd have to say that if silver's going to move higher, if the metals are going to move higher, we ought to see silver break above this descending price channel. If it were to take place today, just to give you an idea, the top of that price channel looks like it's around $20.39, $20.40 out there. That would be a nice move. 39 pennies to the upside. If it happens on Sunday/Monday, it's probably about $20.32 or so. So go ahead and draw that. You don't even have to draw the channel line. Just use the open from the trading session. That's what I would do. I'd use the open from the trading session of July 15th. That happens to touch with the corner of the open from July 18th and the open from July 24th, as well as the open from July 31st. So that's a pretty darn good channel line to draw inside of silver if you want to wait for confirmation that there is a breakout inside metals to the upside out there. If we take a look here at light sweet crude right now, light sweet crude trading at, this is a continuous contract I have up on my screen, 97.65 out here. Light sweet crude on the actual current contract, the September contract, what I can tell you, it has made a price relative strength divergent pattern out here. Do I have that on the screen? I don't, and we're going break. But maybe I can do that while we're at break. Right now, we've got the Dow is up 11, S&P's up about 2, Nasdaq Composite is basically unchanged. Steve Rhodes, TFNN, it is Fantastic Friday. Right.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. Funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC.
Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com. Eastern legend tells of a fair maiden who was offered a rare gift by the king of the land, a bag of pearls. The king promised that she could keep the largest, most perfect pearl she could find with these 3 conditions. 1, choose only 1 pearl. 2, remove 1 pearl at a time, accept or reject it. And 3, if rejected, it would be lost forever. She began by looking at the pearls, passing on many special treasures. She delved deeper into the bag, and soon the pearls were replaced with pebbles. Sadly, she went home empty-handed. Folks, replace pearls with time because we cannot go back even 2 seconds. We live in the eternal moment of now. So when now are you going to take advantage of my offer to you, a subscription to my daily investment newsletter service, Mastering Probability, where you can experience the most incredible pearls for trading and investing, the Rhodes Momentum Indicator and Strategy. The offer? It gets better. A 30-day money-back guarantee. Don't go home empty-handed. Mastering Probability. Available on the homepage of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
The Bull Bear Binary Option Hour, sponsored by Nadex. Up next on TFNN.
Welcome back, folks. Right now we've got the Dow is, I got to find it on my screen. It's up 30 points. S&P is up 3. Composites up 7. Russell 2000 up $1.65 out here. Let me put, before I give you the numbers out here, let me put a chart up on my screen for you. Those of you that are longtime listeners here to TFNN, if you are new to TFNN, welcome, and welcome to the Hotel California, because here's the deal. Once you check in, you'll never want to check out, and check-in time here at the Hotel California, that's been pushed up to 8 a.m. We've got 10 hours of live programming, each and every trading session. Our man John Logan, he kicks us off with the Global Market Pulse, so you can tune in at 8 o'clock and start to get your fix of TFNN. Now, those of you that are longtime listeners know that we can utilize GE, the General, as a diverging pattern that helps us to identify what the market wants to do. This chart here, you go back for years and you can take a look at it. When GE, although it's the least, well, it's like number 27, 28, as far as weighting structure inside of the Dow. So it's not going to move the Dow, but what it does is it actually moves the Dow. Now, what does Stevie mean by that? Well, it's pretty simple. GE ends up being a leading indicator for the Dow and where it wants to move to. And you've got these divergent patterns. The top portion of the chart is GE. The bottom portion is the Dow. When GE is making lower highs and the Dow is making higher highs, it's an indication that the Dow is going to have some type of pullback, some type of retracement. It works just the opposite. When GE is moving lower and they are moving higher, and the Dow is moving lower, it tells you about an impending reversal that's going to take place. Now, what we know, the Dow has experienced the largest pullback thus far. Back here in 2014, the early part of 2014, GE broke a trend line. I see a blue line out here. It took the Dow about 20 some odd days before it finally broke its trend line, and then we saw those lows back into the February time frame. Well, GE broke its trend line back here on June 25th out here. It took until about, July 25th, so almost a full 30 days for the Dow to go ahead and break its trend line. Then we've seen that correction. Now, I just point this out here. You need more than just today's action out here. But what I did notice as I popped it up on my screen, if we take a look at from this point here on August the 5th, right now you do have GE making we'd have to go study the chart of GE, but nonetheless, you've got GE making making higher lows out here. And from that same point inside the Dow, we don't have that. We've had the Dow making lower lows out there. So I will just say, something to think about, and a chart pattern that we want to monitor. Now, it's not used as a timing tool, but it is a really good warning signal out there. So what are you going to be watching for during the day to see if this is going to be one heck of a counter-trend rally? Well, the number here inside of the Dow futures you're going to be focused on is 16,400. 16,400 should be the area where the bears try to unload out there. That's where the battle ought to begin. Any close above it, and the bulls will have taken the strong arm hold. That's what's going on inside the Dow futures that you're going to look at. Inside of the NASDAQ futures, the number to be watching out, and that's nothing more than the 200 period exponential moving average. The number inside the NASDAQ that you're going to be watching for is about the 3872, 3873-ish type range out there. So take a look at that. If we take a look at the ES Mini out here, S&P futures, the number that you're going to be looking for is 1916, 1917. That should be an area where the bears decide to really try to unload. We'll see if they can do that. And then finally, in topping it off, let's go take a look at the Russell 2000 out here. The Russell 2000, that number to be focused on is 1120, 1190. We'll call it 1121. It gets above 1121. And the Russell 2000, which has been strong. If you see all four of those, folks, then it's telling you that that's the area. That's the line of demarcation where the bears are hanging out. We'll see who's going to win the battle, the bulls or the bears. Have a fantastic weekend. Actually, I'll be up next. I'm going to hang out and spend some time with our man Tom O'Brien doing the Nadex Bull Bear Binary Option Hour. Have a great weekend, folks.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
You're watching Tiger TV.